Continuing on in session 7, we're now going to move to the CRIS values. In the back of your book is a handout with a clip on it. It's a data printout covering it has 2 sections, 20 periods of data in each section. There's nothing magical about the 20 periods other than the fact that I could get 2 sections with 20 periods each on the same page and still leave you some room at the bottom. CRIS, if you look at the mini letter I gave you, this actually came off the CompuTrack website. Not CompuTrack, but Stratagem, where I write the commentaries. I wrote a page for just a general overview of the CRIS values. CRIS, as you see at the top of that explanation, I actually named this one after my son Christopher. CHRIS, current health as a relative index of strength. So I'm indexing +5s down to -5s. And Christopher and I were kidding about it, and I said, you know, I could call it Christopher. He said, what are you going to add to it? I said, well, current health as a relative index of strength towards optimizing probabilities higher for entry and exit, or entry and reverse. I said, but I think we're going to keep it at CRIS. In the money spread section, and this is why it's good to put the 2 sessions together, the money spreads and the CRIS values. In the money spreads, we talked about moving averages on CFG and moving averages on RSI. And we covered 20-period exponential on CFG against 20 on RSI, 45 on CFG exponential, and a 45 exponential on RSI. When the 20 on CFG was greater than the 20 on RSI, and the 45 on CFG was greater than the 45 on RSI, we said that both money spreads were up. In the 5-2 values, when I put CRIS together, the section where it's either +2 or -2 are the direction of the money spreads. The 20s are the shorter term, the 45s are the longer term. If both are up, like we did with moving averages on RSI and close, if both of them are positive, the 20 on CFG greater than the 20 on RSI, and the 45 on CFG greater than the 45 on RSI, it would be a +1 for each one of them. So you'd have a +2. If they were both negative, where the respective CFGs were below their RSIs, it would be 2 minuses, giving you the -2. So the 20-period set becomes a short term. The 45 set becomes a longer term. So if they were both down, in other words, the 2 45 CFGs were, the 45 on CFG was below the RSI 45, and the CFG 20 was below the RSI 20, you'd have -1 and -1, each as separate values. So you'd have a -2 total, -1 for the 20s, -1 for the 45s. Since the 20 is a shorter term moving average period that we're applying, when that 20 on CFG goes above the 45 on, the 20 on CFG goes above the 20 on RSI, and it turns positive, then your short-term money spread is turning up, but your long-term money spread can still be negative and be a -1. I like to look at it not so much as one canceling the other, where a lot of technical tools, when they write them and say, well, the short-term indicators turn plus, the long-term indicator's still minus, so it's a neutral. I like to trade in the direction of what the major trend is, but I like to know what the short-term indication is. So if both were down and the 20 on CFG went above the 20 on RSI, that one would change to a +1. So when I express the number as a -5 CRIS value with the money spread value being +1. Long term is still down, but going to a +1 says the short term is turned up. Then when the 45 on CFG crosses above the 45 on RSI, it is also 1. So now we're at a +2. If both of them were still positive, the 20 on CFG above the 20 on RSI, the 45 CFG above the 45 on RSI, you'd have a +1 and a +1. And your CRIS value could be +5, +2. But when that 20 money spread goes negative, it becomes a +5 -1 because the short term has told me it's down. If it doesn't go to -2, it might just be a little blip and turn back up. Now, the CRIS values themselves, I put this in here, proprietary trading tool, trading model or tool, reading right from the letter I wrote to the traders or to those on the website, those on the service, those I write for. Based upon indicators taught in advanced level of course. Well, this is the advanced level, basically. The edge, because I did not teach money spreads in the regular advanced course. That's why I gave this a different number or name as the edge. While it could be employed as a black box system, we prefer to use CRIS as a technical tool for monitoring trends. Everything that we've gone through in the edge, when I say if you get a positive and the money spreads turn positive and everything comes together with the price support line on close, and if it's a +5, +2, you're pretty much in the catbird seat. Trend analysis helps to identify direction of trend. CRIS values show where the market is in relation to and with respect to the market's overall trend. If you have a +5 value, which is max on the upside, your moving averages of RSI and close, which are incorporated into the CRIS value, along with the other moving averages on CFG, RSI, and the SMA3 are also incorporated. So that number, when it goes up to a +5, tells you the trend is probably turned. Normally, when a trend is trying to turn, you get a sharp reaction. If a market's been going down, these CRIS values may start to turn and go up to a +5. From after being down, they'll turn quickly. But when they turn, you usually get a reaction opposite down. It gets a little overbought, sells off. You should see a positive. The positive shows up with the +5. Now you know you're in gear. But once the move starts, it can stay in force for a while. I saw the CRIS values on hogs when hogs were at 57 cents go from 57 to 37, a 20-cent drop in price over the course of about 6 months. Every single night when I calculated the CRIS values, they were at -5. When I looked at the money spreads the same night, they were at a -2. So as far as trend follower, as far as one of the real secrets, are you going to tell us the secret? You get +5, +2, you got an uptrend. You get a -5, -2, you got a downtrend. If price action and volatility and markets all over the place and the numbers still at a -5, that's fine. It's still down. If it's still at a +5, we're still up. Second paragraph, CRIS values expressed in two parts or two numbers, such as either +5, +2, or -5, -2. And I mentioned this during the sessions. First number's intermediate to long-term trend. Second number's more for the short term. Next, you have a CRIS range from a -5 up to a +5. Market trend is considered to have changed when the CRIS has moved from one extreme to the other. The new trend is viewed as the current trend until which point the CRIS value has again moved to the opposite extreme. So when you go +5, +2, you're up until you see -5, -2 as a trend monitoring, quote, black box system. If you see a +5, +2 and that RSI is not above 60, and you're up against the top end of that 90-day trading band with the 6% moving average above it, or the 90-day moving average and plus the 6% band, you're extremely overdone. Maybe that started to fall off. Maybe the CFG is not getting as high as it was on the chart before. Maybe hourly charts are saying we're seeing negative reversals or range shifts, and you're starting to see evidence of range shift, even if the CRIS is at a +5. You don't necessarily have to wait until it goes to a -5. But I'm saying as far as an overall perspective of overall trend and monitoring that trend, as long as it's +5, you should be seeing positive, and it's -5, you should see negatives. So you can use it in conjunction with the basics of pattern recognition for positive and negative reversals. And that's what that next paragraph was. Once a market, for example, is moved to a reading of +5, +2, trend considered up, it will then be viewed as up until a reading of -5, -2. We can get up to a +5 and sell back to a 0, never go to a -5, get a positive reversal signal, kick it in again, and it can go back up to +5. I've seen it sell down to a -3 and kick in a positive and turn back up. And it'll kick in a positive, go up, sell off into another positive, and the second positive shows up, it's a 0. Then a rally and a sell-off, and then it's back to a +3 and back to a +5 and stays +5 for a while. Crude oil's been +5 since $20. It's now at 25.5. Bonds were at -3, I believe. -3 or -5 when we kept banging on that bond chart up at the 60 level at 103.5. Then there was like a -3. It went to a -5, -2, and it's been that way every single day for the last 3 weeks. If price action, your next paragraph, price action of a market starts to correct or retrace, the shorter value may correct from a +2 or a +1 or even down to a -1 or a -2. You'll see evidence where you can be a +5 with a -2 because the money spreads are negative. Long-term value may also correct from a +3, 0, or even a -3. Even though price action and CRIS values are declining, it's not until the values reach -5, it should have been -5, -2, it is. The trend is then considered to reversed. But take everything that we've gone through in the courses, the basic, and also in the edge, and look at chart analysis and then figure out where your CRIS values are. A drop in CRIS from a +5, +2 to a +3, -2, or even -3, -2 suggests a correction in the ongoing trend. During a corrective rally in a downtrend, CRIS could move from -5 up to a -3, +2, or even a +3, +2. It's not really till it hits the opposite extreme that you feel it's really long-term, and I say long-term with respect to a trend 4, 8 weeks, 12 weeks. I've put trades on. I remember a couple years ago I did it wasn't CNBC, it was Financial News Network. Went short gold in February and got out in June. And I think it was from like 425, 430 all the way down to 350. And every week, Liba Geft on Financial News Network would say, Andrew, are we still short gold? Sure. I didn't have CRIS back then. But that's the way I view a trend. As long as it's moving, I'm staying with it. And I let the markets show me what they're going to do. CRIS values is determined daily and based on the indicators. Moving averages calculated on the end of day closing price. Once an uptrend, +5, +2, or downtrend, -5, -2, has been discerned in terms of CRIS value, we then watch for positives and negatives. With respect to CRIS values, we should see positives with +5s, +5, +2 readings, and negatives with -5, -2. A value of +5, +2, or -5, -2 at the close each and every day for weeks helps to identify strongly trending markets and stay with the position longer. Combining CRIS values, range rules, positive and negative reversals also helps to identify the larger trend moves and additional entry points along the way. CRIS values are about as black boxish as I want to get. One thing that I do have that I would put in a black box system is the 9 and 45s on close and RSI, the original guidelines, which I've used for the last 15, 17, 20 some years? God, I'm getting old. That's something that's never changed for me. 9 and 45 on closing price, yes, is a little more heavily weighted than the 9 and 45 on RSI. But when they're both pointing in the same direction, you don't question it. Your next page, Chris values an objective and quantitative quote trend model. As I mentioned previously, I've seen markets start in an uptrend and stay +5, +2 for months and never change. And that market go up, retrace, go up, retrace, go up, retrace. Like we were talking about, how do you define momentum highs or lows relative to how many periods you look back? As long as I'm seeing a +5 reading, I'm viewing it as an up. If I'm seeing a +5, +2, telling me both money spreads are up, then it's strong, it should be a strong up. Intermediate to long term, the first +5. On your left-hand side of the page, you see +5 up, on the right side, -5 down. Broken into 3 columns there. Look at the center column first. 9 and 40, close, RSI, CFG, SMA 3. Left-hand side, SMA 9 greater than E45, or simple greater than exponential. Simple 9 greater than exponential 45 on close. That should be a +1. You can put a +1 beside it. SMA 9 greater than EMA 45 on RSI. That would be a +1. Now, the way I did it, I broke it into sections. You can draw a line actually under SMA 9 greater than EMA 45, because that's the first part of the equation. In the very, very basic course, we use guidelines of RSI moving averages up, close moving averages up, we're +1. RSI moving averages down, closing price moving averages still up, we're side up. So if both are up, 9 and 45 on close, 9 and 45 on RSI. If they're both pointing up, it's a +2. +1 for each one of them. If the close price moving averages are up and the RSI moving averages are down from our basic course, it's side up. So it's +1. Okay? Moving averages on RSI are down, but closed moving averages are up. We're giving more weight to the closed moving averages. So it's not like +1 and -1. It's just a +1. But if both close and moving averages are up, it's a +2. Where we had the moving averages on RSI down and the moving averages on close down, then it becomes -2, 1 for each level. But if moving averages on close, 9's below 45, it's a -1. And the moving averages on RSI are up, it's not really a +1, because the trend analysis guidelines say RSI moving averages up, closing price moving averages down. Let me restate that. If the 9 and 45 on close are down and the RSI moving averages are down, it's -2. But if your moving averages on close are down and your moving averages on RSI are up, then it's side down. Remember, we had up, side down, and down. So in the case where your moving averages are up, but your closing price moving averages are down, it's side down, which means it's -1. So the first part of the Chris equation, I actually take those 9 and 45s and figure out what those guidelines are. The second part, EMA 45 of RSI on your left-hand column, third line down. EMA 45 RSI greater than 50. Simple, straightforward. Greater than 50 plus 1. Next line, EMA 45 of CFG greater than 50 plus 1. Last one, we had talked about using the SMA3 and how I put a simple or an exponential 20 on that SMA3 to smooth the volatility of the SMA3. 20-period exponential of the SMA3 greater than 50. The reason I broke it down is the original work that I did was the 9 and 45s were up and the EMA 45, 9 and 45 on close, 9 and 45 on RSI. EMA 45 on CFG and SMA 3. Just to recap, looking at the left side, you got to break the 9 and 45 on RSI and the 9 and 45 on close as one section. It's going to give you a value. It's going to be either +2, +1, -1, or -2. They're the only four you can have. Second part was the EMA 45 on RSI greater than 50, EMA 45 on CFG greater than 50, and the EMA 20 done on the SMA 3, which we did on RSI 3. So when you go to calculate that EMA 20, you want to do a simple RSI 3 period, then do a simple moving average of that to get your SMA 3, and then do a 20 on the SMA 3. The right side of the column is for a -5. Again, you're going to break those first two lines from the other three. SMA 9 on close below EMA 45 on close. Second line, SMA 9 of RSI less than the EMA 45 of RSI. If the moving averages are both down, it's a -2. If they're both up, it's a +2. If close moving averages are up and RSI moving averages 9 and 45 are down, it's side up. That's the way we talked about trend originally. So it's a +1. If the closing price moving averages and the RSI moving averages are both down, it's a -2. If the closing price 9 and 45s are negative, but the RSI moving average 9 and 45 are positive, it's a -1 because it's side down. The RSI moving averages being more sensitive, they're going to be up. So you can, again, have either +2, +1, -1, or a -2. The second section is the EMA 45 of RSI is less than 50. Your next one, EMA 45 of CFG, less than 50. And your last one, EMA 20 of the RSI, of the SMA 3 that you did on the RSI 3 is less than 50. So for a downtrend, you look at, to get a -5, you would have to have them in that order. The 9 on close below 45 on close, the 9 on RSI below its 45, the EMA 45 of RSI below 50, of CFG below 50, and of the EMA 20 done on the SMA 3, all below 50. For sake of simplicity, take it as it is presented there. If the 9s are below their 45s, the two 45s are below their 50s, and the 20s below 50, just figure -1, -2, -3, -4, -5. The opposite for the left side of the page. 9 and 45s on close above 50 on the 9 on close above the 45 on close, +1, the 9 on 45, the 9 on RSI above the 45 on RSI, +1, EMA 45 of RSI above 50, +1, EMA 45 of CFG above 50, +1, EMA 20 done on the SMA 3 above 50 plus 1. So when you see them line up like that, it's plus 1, plus 2, plus 3, plus 4, plus 5. All would be right with the world if it went from -5 to +5. If it were that simple. If pitchers didn't throw curveballs, life would be simple. That's the straightforward approach. Wait till they all line up. The more you work with it, the more you're going to see how you can get these patterns to where it'll go from a +5, +2, and then there's a little correction and it drops to a +3 or a +3 -2, because the bottom half, the short to intermediate trend, is the money spreads we talked about. The 20 on CFG greater than left-hand side, lower left of the page. 20 on CFG greater than 20 on RSI. 20 or 45 on CFG greater than 45 on RSI. So if the whole left side lined up +5, +2, you'd see every value exactly the way it's presented there. When a market gets a little bit ahead of itself and people take profits and it corrects a bit, you might see a reading of +5, -2 because the short-term money spreads turn down a little bit. But if they turn down and you see a positive and you're 9.45 on close and you're 9.45 on RSI and your 45s both on CFG and RSI are still up and the 20 still up, then you got a +5, -2. Probably a short-term correction. The interplay between the 9 and 45s on close and RSI, you guys have worked with, students have worked that have taken the course for years. Those values don't change because they're, if anything and anything I do is chiseled in stone, it's that. As long as you follow the guidelines for moving averages on price and moving averages on RSI, you should at least stay out of trouble. We saw from charts we went through, we saw them turn down back in mid to late July. Actually, on the shorter term, using shorter term moving averages on price and RSI, they turned down early July. But there's no way you would have been caught in a major market collapse like a lot of people were using just the guidelines for the 9 and 45s. You would have seen the trend was starting to turn lower and at least protected yourself. Where it gets dicey, a little dicey, is when the markets start to move around and those CRISP values change. A point I want to make also is the fact that while I am in the process of working with Jim on computerizing this whole thing, I still do them by hand, and I showed you the spreadsheets. The handout that we're going to work from now is in the back of your book where it has the columns of the values of the indicators that we've used throughout the course and in the edge. What Jim and I are working on and trying to computerize to make the quote black box, and the reason I don't want to call it a black box is if you've ever traded with a black box system, if the black box ever falls apart, you don't know how to fix it. Most black boxes, programmers that write those computer programs, you can buy the software. You can buy the list of programming or the list of signals. In the case of the CRISP values, I publish them in the service. I calculate them. I talk about them all the time. Gold is now at a +5, so we should see higher prices. Those that have taken the courses and gone through the edge know how to calculate. I will show you how to calculate. I have. I'm going to show you a couple of variations that get a little goofy. When they get goofy, it's not that there's anything wrong with it. It's just market volatility has made it move one way or the other, short term at least. And when a computer does it, it's a condition statement, either or. It's got to be plus or it's got to be minus. If you have three variables, now here we talked about, look at the left side. For a market that's up, the 9 and 45 on close are up and the 9 and 45 on RSI are up. Simple, straightforward, concrete, conditional statement. Both 9 and 45s have to be up for it to be a +2. Both have to be down for it to be a -2. We talked about side up and side down. Side up is a +1. Side down is a -1. That's fine with 2 variables, but when you put 3 in the mix, you can get all kinds of combinations. You can get a CFG 45 above 50. You could have a 45 on RSI above 50, and you could have a simple moving average 3, the E20 of that SMA 3 below 50. Now you've got 2 plus, 2 of them being above 50 and 1 being below 50. So now you have 2 pluses and a minus. Well, a plus and a minus would cancel, and you still have a +1. Added to, if your 9 and 45s were set to a +2, you'd be a +3. Now let's look at the next page, the first page of your handout from the back of your book. And I thought I had this in spreadsheet for, well, what I handed out was a tabular listing, as we said, 20 periods, broken into 2 sections. The first section should see a Dow Jones chart. It's Dow Jones data. Has the first column has a date, and in the edge we covered the 13 high, the 13 low, the 65 high, and the 65 of low. So you have price reference points. So let's label columns. At the top, we're coming to the next one. S9 RSI, simple moving average, 9 period of RSI 14. That's column 1. Next to that, E45 of RSI, column 2. Next to that, simple 9 on close, column 3. E45 on close, column 4. The 9 and 45 on RSI and the 9 and 45 on close price are those 4 columns. You know the interplay from your basic course. We reviewed it. The 9 above 45, they're up. The 9s below their respective 45s, it's down. The bottom section, we have the date, close, RSI 14, SMA 3. Now, I put it in there as SMA 3, but if you want to make a note on, I'm used to it after doing it so long, that SMA 3 is the SMA 3 of the RSI 3. I only had so many columns to work with, and I had to drop certain things to make room for others. The next column after SMA 3 is CFG. And you can see there when I first put it in, we used to call it the CFG Mo. It's just a straight CFG value. So we're going to call that column 5. Column 6 is CFG exponential 45 period moving average. That's column 6. Column 7, RSI exponential 45. It's the 45 period moving average on the RSI 14. That's column 7. Column 8, E20/3. That's the exponential 20 on the SMA 3. That's column 8. Label that 8. Column 9, RSI exponential 20. 20 period exponential moving average on the RSI. The next column after that is close exponential 20. It's a 20 period on close. I don't even label that. We'll just skip that one for now. Last column on the right, CFG 20 exponential. Or exponential 20 period moving average on CFG. That's column 10. To make it simple, let's start first with the easiest. Look at column 10 versus column 9. exponential 20 on CFG against the exponential 20 on RSI. That's your 20-period money spread, your short-term money spread. 20 on CFG against 20 on RSI. Column 6, CFG 45 against column 7 is your 45 money spread, your CFG against your RSI. Now, if you look at the bottom row, the CFG 20, column 10, the last input on there is through the 20th, which I guess was last Wednesday. It's a reading of 65.51 versus column 9's reading of 60.84. The CFG 20 is greater than the RSI 20. The short-term money spread is positive. Right? Column 10, do it again. The last input, your bottom line data there. CFG 20 had a value of 65.51. That's greater than the value in column 9, which is the RSI exponential 20 at 60.84. The CFG 20 is greater than the RSI 20, the short-term money spread we had shown in the charts as a line. Here you're looking at it as a tabular list. The other money spread we used was the 45s. That's column 6, your 45-period moving average on CFG against your 45-period moving average on RSI, which is column 7. And column 6, the last data point at the bottom of that column is 62.49 versus the last data point of column 7, 57.24. When you look at a chart, and you can, when we were going through the money spreads before and we had the 20 on CFG versus 20 on RSI, you saw it as a line going across the chart. This is the way you see it in a tabular set where you have the data points. For some people, it's easier to see the line. For other people, they want to see the numbers. So that's how, when this prints out, I can look at the column 10 versus column 8, column 10 versus column 9 and say the 20-period money spread is up. I can look at column 6 versus column 7 and say the 45-period money spread, the longer-term money spread is up. There's a lot of interplay that you can do, which you can take the 20 on CFG against the 45 on CFG1. You can take the 20 on RSI against the 45 on RSI on your computers. You can plug in the different relationship or different length moving averages. But this, I like to do CFG against RSI because that was the basis of the money spreads, and it's also the basis of the plus or minus 2 in the CRIS values. All right, if we go to the top section where we had columns 1, 2, 3, and 4 labeled RSI 9, simple moving average 9 of RSI is column 1, exponential moving average 45 of RSI is column 2, simple 9 on close, simple moving average 9 on close is column 3, exponential moving average 45 on close is column 4. If the 9 is above the 45, in our basic guidelines when we started way back in the original courses, 9 on RSI greater than 45. Right, 9 on RSI greater than the 45 on RSI, and the 9 on 45, 9 on close is greater than the 45 on close. They're both saying that they're up, respectively. If you look at it in a number reference or number relationship and look at your last data point, column 1 there, that we've labeled 1, not the date column, the one we've labeled with SMA 9, 62.48 versus 57.24 in the column next to it, the 9 greater than the 45 on RSI. The next column is 9 on close, 10,586 versus 10,211. Both 9s are above the respective 45s. So the RSI moving averages, 9 above 45, closed moving averages, 9 above 45, trend is up. +1 for the 9 and 45 on RSI, +1 for the 9 and 45 on close. That takes care of the top section. And when I print these out on a daily basis, I'm not listing 20 periods of data every single day. I'm really only listing like the last 6. The reason I list only 6, remember we talk about signal counts? Best signals come 2 to 5 periods apart. You have your X point. If you make a momentum low and start your count, that's your X. 5 days later, you might have a bullish divergence. You might have a positive reversal. But you can look back over the last 6 days, see your X point, see what your count is. Here I listed 20 just so you can actually take a look at how it's moved, how those moving averages have moved as numbers as opposed to lines. So if the 9 and 45s are both up, and I said these sections are separate. When you look on that spreadsheet, or not the spreadsheet, but where we have the CRIS formulas, the 9 and 45 on close and the 9 and 45 on RSI are those first 2 lines on that formula page. You want them both up, 9 and 45. Each one is up respectively. It's separate. The number that you're going to get is either up, side down, or down. So it can only be +2, +1, -1, or a -2. Once you have that +2, that's the first half of the CRIS value. The second half, the columns we marked at the bottom section, we had marked CFG 45 as column 6, RSI 45 as column 7, E20 on 3 as column 8. Circle those 3 numbers because that's where the next part comes from. The CF column 6, 7, and 8 that we had labeled for CFG 45, column 6, RSI 45 for column 7, and E20 on 3 is column 8. It was pretty straightforward in the formula section. All 3 of those values must be above 50. You look, the last data points for each one, column 6, 62, column 7, 57, and column 8, 62. All 3 of those values are above 50. So it's +1, +1, and +1. And as I said, it's real simple to get to 5s because it's straightforward. In the upper section, if it were side up, where the moving averages on RSI were down, but the moving averages on close were up, it would only be a +1. If the moving averages on close were down and the moving averages on RSI were up, it would be a -1. And if both 9s were below the respective 45s, it would be a -2. In the bottom section, the interplay that you will see with column 6, 7, and 8. Column 8, the exponential 20 on 3 is so quick in relation to the RSI 45 or even the CFG. When I showed the money spreads, we showed the graph with the lines for CFG 45, RSI 45, and SMA 345. The RSI 45 is the least volatile. The SMA 3, or the exponential 20 on 3, is the most volatile. So if all 3 of these values of the end of column 6, 7, and 8 are all plus or greater than 50, it'd be +1, +1, and +1. If they were all below 50, they would be minuses. So you could have, at extremes, all 3 above it, which would give you a total value of +3 for the bottom section. Say that right? All 3 above 50 is a +3. All 3 below 50, it would give you a value of -3. If you had a case where the exponential 20 in the bottom section, column 8, the exponential 20 was below 50, and the other two were still above 50, then you'd have two pluses and a plus and a minus would cancel. Two pluses and a minus would cancel to a +1. Two minuses and a plus would cancel or drop to a -1. It gets a little tricky, and I think even getting with some people trying to write it in the program, I see things and I calculate the number, and then when I'm running on computer, that's not getting the same number. So we've still got a little bit more work to do on it. But with my numbers, I mean, when I do them with these spreadsheets, I get so used to it. I just look at that bottom section. If all three are above 50, it's a +3. If all two, and then go to the other section and see whether it's side up. But when you get these numbers, the bottom section, as I said, if all three in this case, what we have here on the Dow Jones is it's +5. When you look at the money spreads that we've gone through, the 20-period money spread is plus. The 45-period money spread is plus. You have the Dow at +5, +2 right now. That could be changing. And if it changes, the first place you should see it is in the shortest term indicator you have, which would be the money spread 20s. The 20-period money spreads might go from a +2 to a -1 because the 20 money spread will turn negative first. The 9 and 45 on close will take a while. This lower section with the E20 on 3 is the shortest indicator within this whole group that we're using to create these numbers. If the E20 on 3 were minus, in the sense of below 50, it would be a -1. And if the 45 on CFG and the 45 on RSI were still above 50, you'd have two pluses and a minus, which would reduce to a -1. If the moving averages on RSI turn down, good example, 4 pages over. Now I've given you, your first page is Dow Jones, June futures. Second page is bonds, June. Third page, I have 2 bond charts, or bond list here, a second bond. We have one there on Microsoft. If you look at the one on Microsoft data, the top chart, S9 RSI, that column is marked S9 RSI, remember, 9 and 45 on RSI, and we had called that columns 1 and 2 for the 9 and 45 on RSI. Next to it, we had the S9 on close, column 3, column 4, the E45 on close. Lower section, right under the word Microsoft, the CFG Mo 45, we called that column, no, CFG Mo, we called column 5. CFG 45 moving average is 6. RSI E45 was 7. E20 on 3 was 8. RSI E20 was 9. We skipped a column, and the last column on the right was CFG 20. Look at the data points in the top section as of the 20th. Column 1 versus column 2. Simple 9 on RSI, greater than 45 on RSI. That's a +1. Simple 9 on close, 62.22, 62.24. That's tight. 9 is below 45, so that's a -1. So your moving averages on RSI are up, but your moving averages on close are down. And looking at that data point, we just turned down. We're in the process of turning down. You look at the bottom on columns 6, 7, and 8, circle one big circle and include 6, 7, and 8 because that's your lower section. And that's what has to be calculated together. You see in the bottom of column 6, the CFG of 50.11, still above 50. And RSI 45, 47.23, below 50. E20 on 3, 49.70, below 50. So you have 2 down there that are minus. Column 8 becomes a minus. The value at the end of column 7 becomes a minus. And the value at the end of column 6, or at the bottom of the column, the 50.11 becomes a plus 1. So now you've got 2 minuses and a plus. A plus and a minus would cancel, leaving you a minus 1. At the top, you had RSI moving averages up, but closing price moving averages down, saying what? Side down, because moving averages are up, close price is still down. Side down would give you a reading of minus 1. If it were straight down, it'd give you a reading of minus 2. So your top value is a minus 1. Your bottom value is a minus 1. So when you look at Microsoft, it's actually a minus 2. And even the recent run-up that we had in Microsoft, it has never gotten above a plus 3. That gives you the first part of the CRIS number to the left of the hash mark. Look at the CFG 20 versus the RSI 20. It's 52 versus 48. Column 10, CFG 20 against the RSI 20. It's a positive. It's a plus 1 because the CFG 20 is greater than the RSI 20. Now look at your column 6 and column 7, your 45 period money spread. 50 greater than 47. So you've got minus on your money spread, plus on your 20 money spread because the 20 is above the RSI 20. The CFG 20 is greater than the RSI 20. And the CFG 45 is greater than the RSI 45. So they're both plus. The number you calculated from the lower portion of the chart, of the table, and your moving average guidelines for price for RSI and close were a minus 1, and the lower portion was a minus 1 and a minus 1, giving you a minus 2 CRIS with plus money spreads. So you'd have a minus 2 for a CRIS value and a plus 2 for money spreads. Microsoft had never gotten above 5 on the last run-up and sold off. So I think the lowest I saw on there was actually a minus 5, and it's rallied back up on the recent rally to a minus 2, but it's still not even gotten back above 0. But the minus 2 says the CRIS value says the trend is down. The money spreads say it's up. If you look at the RSI value, lower section, bottom section, column 3 columns in, RSI 14. That's your RSI 14 on close. I don't see that above 60. It's not been above 60, so the range is still pretty much holding resistance at 60. Price is where your price close resistance is. Look at March 5th on that date at the bottom. A close of 63.05, an RSI 14 of 56.46, an SMA 3 of 88, a CFG value, the next column, of 105. So your CFG is way overbought. Your SMA 3 was well above 80. The numbers from that day, if you go further across the 3, columns 6, 7, and 8, 44.25, 44.37, and 46.36. All 3 of the numbers in the lower part of the chart, or the lower section, are below 50 for a minus 3 reading. You go to the top part of the chart and look, put a piece of paper or ruler right along March 5th. RSI moving averages were down. Closing price moving averages were down. And your 3 values in columns 6, 7, and 8 that day on the March 5th were all 3 minus. So you were at minus 5 On March 5th, where the close is 63.05 on your bottom section, where your close price and your date are, just right next to it, -5. Well, Chris has been to a -5, and we've had a little bit of a rally, and all it's been able to do is get back not even near zero yet. The money spreads on the 5th, if you look at the columns, were 49 on CFG versus 42 on RSI with the 20 values. That's +1. And 44.25 and 44.37, -1. So that day we were at -5 and a +1. We never got to the CFG money spreads, although they turned positive, the 45 money spreads were still negative. I have tried to explain CRIS values now, before, in special sessions with people on the phone, across the table with them. It takes a lot of input because I have not written it in a computer model yet. I just take it as a spreadsheet. And I have spreadsheets that I do by hand, where every single day I write the close price, the CRIS value, the money spread value, all on the same page. This way I can keep a handle on whether it's changing on a closing basis and be able to see where it is in relation to price and CFG, money spreads, and also the 5-2s. But no matter how many times I've tried to write it in computer, there's things that go through my head that I guess I'm not telling the computer the right thing. Other people I've worked with on software, we've tried to computerize it to make it a model, and we're still in the process of doing it. The RSI edge is a level above and beyond what most people take in terms of RSI. Most people think you can use bullish bearish divergence. It's a simple little oscillator. What we do in the edge is we take it, what you've learned in the basic courses, to a higher level. What I have said I would do with people in the edge courses, for those that complete the edge course, I'm going to have, as I said earlier, I'm going to have a few supplements I'm going to send out. Anybody who goes to the RSI Edge course, we will forward to them for a couple months the CRIS values in terms of how I calculate them. When it's done in computer, I don't know much longer it's going to take, but my numbers are a little different than what we're seeing in the initial computer studies. But I have certain things that I do that I look at maybe in my head that a computer doesn't understand. If I were to see 945s up and the 45 on RSI above 50, the 45 on CFG above 50, but the exponential 20 on 3 at a value of like 50.01, I may fudge it a little in my mind, where the computer has to wait to see it. It has to go below 50. But in my mind, if you look, and this is why I do the 20-period list, for you to look at the value on these different indicators over the time, see the direction in which it's going. You'd see it on a graph when you throw it on a chart. With a tabular listing, you can see the actual numbers and see if they have reversed direction. The 20 on 3 is going to be the first one to turn in the bottom section. The CFG 45 is going to be the second one to turn, and the RSI 45 is going to be the third one to turn. CRIS is dynamic. CRIS is powerful when it's all lined up, 5-2s. With what you've got in the money section, money spread section, you see it graphically. What you have here, you have it in a spreadsheet format. You work with it, it'll be dynamic. Thank you.